Hi there, good afternoon. You've tuned into ET now, and this is Closing Trades with me, Shal D'Souza. Let's take a look at what the markets are doing at this point in time, given the fact that we have been resilient, we have been consolidating over the past few trading sessions. No doubt you have the impending Indo-Pak tensions that are actually weighing on the markets at this point in time. Let me actually take a look at the flash on the bottom of the screen, because you have the Prime Minister who's chaired a high-level meeting with the secretaries of the Government of India to review the preparedness and the interministerial coordination in light of the recent development concerning the national security. What the Prime Minister has stressed is the need for seamless coordination amongst the ministries and agencies to uphold the operational continuity. Apart from that, the secretaries have been directed to undertake a comprehensive review of their respective ministry operations, and all ministries have identified they are actionable in relation to the conflict, and they are ready to deal with all kind of emergency situations. So that's the glimpses that you're getting in from the Prime Minister's high-level meeting with the secretaries of Government of India. What he's saying is they've called for continued alertness, institutional synergy, and clear communications. This is in light of the heightened tensions that we're seeing with relations to India as well as Pakistan. So yes, on back of that, you had the Prime Minister that's chaired high-level meeting with the secretaries of Government of India. But let's move on and let's talk about what exactly is happening with the markets at this point in time, given the fact that we are a bit subdued when you talk of the benchmark indices. We have actually extended our losses from the day's highest point. Let's take a look at what Nifty Bank is doing, and is that supportive of the market at this point in time, where the Nifty Bank lies. It is trading flat it's actually trading absolutely flat. The broader markets, on the other hand, let's take a look at what the broader markets are doing, because that's a particular point that has been pretty painful over the last few trading sessions, given the fact that the underperformance has been huge or the outperformance has been huge for the broader markets. Right now, mid-cap index is down almost 0.9%. If you look at the volatility index, the Nifty VIX index, it is actually risen in 10 out of 11 sessions over since the Pahalgam attack has happened. So there you go. The volatility index is about 19.8% at this point in time. So that's the way how the markets are looking like right now. As you see, there are certain stocks that are in focus on back of the fact that you have earnings and what the earnings are in store. Let's take a look at some of the winners in trade today. You have Symphony that is reacting to its numbers. Remember, we spoke to the management as well. They said that they've launched new products, and on back of that, their earnings have seen a good uptick in Q4. Q1 also, they're expecting to be much better. So that's Symphony for you. Canara Bank is the other one that's come out with their earnings a short while ago. And if you look at Canara Bank, that one has seen the Q4 actually much better than estimate. The Q4 profits, on back of that, you have Canara Bank, a sharp spike, 3% uptick coming in for Canara Bank on an intraday basis. You have Blue Star, on the other hand, that has hit a 9-month low on a weaker than expected Q1 sales outlook. You have DB Corp that's fallen on back of the Q4 profit actually seeing a slump. On the other hand, you have UPL. Take a look at that stock, because China's anti-dumping duty on some of the product shipments from India is the one that's weighing on UPL. The stock is down about 4% or so. But let's put the spotlight on the commodity market. Remember, the crude has been a pain point. It did see a sharp downtick after OPEC decided that they will go ahead and hike the supply. But post that, we've seen some sort of buying coming in the crude oil market. We spoke to Ferdinand Fesharaki, who is the founder and chairman emeritus of FGE, and try to understand the rationale and the impact of the OPEC Plus output hike, as well as the outlook for the US crude production. Yes, Yara, what he has to say.
The fundamentals of the market today is quite tight. Inventories are very low. If you want to do something, the best timing is now, because the impact on the market is not so dramatic. You saw the prices drop by $3-4, and then they gained it back in 2-3 days, because at this point in time, the low inventories actually mean that the market is quite strong. So you have achieved several targets at a good timing with one move. But does it mean that the prices will keep going down? The answer is no.
Right. So how likely, Dr. Fesharaki, do you think it is that OPEC Plus will implement another triple unwind of cuts, similar to the 411 kb per day increase that we saw in May 2025, perhaps?
I think they will do more. until they basically get to the end of the voluntary cutbacks. And of course, every time they do it, they watch the market. If there is a disastrous drop, of course, they would slow it down or stop it. But they think they can manage it, and this continues definitely until October, maybe even a bit later. But their basically target is to encourage new demand growth. Countries like India, the demand growth could be quite substantial as a result of the lower prices. In China, maybe not so much, because in China, the EVs have basically reduced gasoline and diesel demand. They've already peaked by end of 25. And while other parts of the barrel are growing, but there is a very small reaction to the lower prices. At the same time, lower prices would seriously damage the US production. So the market can come in balance slowly, but nobody looks at it as a long-term strategy. This is 6 months, 3 months, 6 months, maybe even a year. And after that, we still expect the prices to go back to $70 a barrel.
How significant, Dr. Fesharaki, do you expect the downward revisions to the 2025 US oil output forecast could be? Could it be sub 50 per barrel WTI in the current environment, you think?
No, I don't think so. You have to look at WTI and Brent having about a $3 a barrel, $3 to $4 a barrel differential. So US prices cannot go down on their own. They would have to be, they are linked to Brent. But the US production at mid-50s already will be challenged. So as soon as there are indications of US production falling, I think Trump would have an incentive to begin to change direction, because he is a great supporter of the oil industry, particularly the US oil industry. And he doesn't want to upset his friends who helped elect him as president. And they're will be calling him and telling him, what are you doing? What you're doing here is increasing demand and reducing supply. So this year, maybe the US oil production will be lower by 100,000 barrels per day than it might have been without these policies. But these are cumulative. So it has a big impact on the US oil supply over a period of time.
Right. The other thing I wanted to talk about, Dr. Fesharaki, of course, you know, from what I gauge is it's all on Trump, and I wish we could read his mind to try and predict the future course of not just crude, but all other asset classes. But what additional global factors, such as maybe SPR filing or US-Iran nuclear talks, should one consider alongside OPEC Plus output changes to try and figure out where exactly the oil markets are headed?
Well, we have learned that the sanctions don't work. And while the US is committed to bringing Iranian oil exports to zero, as of today, all the policies of the US have had no substantive impact on the US, on the Iran oil exports. So we think that the Iranian oil exports may go down by a few 100,000 barrels per day, but from, say, 1.6 million barrels per day of crude and the 400,000 barrels of products, so the total of 2 million, maybe a few 100,000 barrels per day can go down.
And joins us to talk about क्या बात करें?
Mumbai ki barish.
Unexpected things are happening everywhere, right? Tariffs are getting solved. The geopolitical tensions. It looks like we are at the end of the, end of this, at least this cycle.
Yeah.
Earnings season is ending.
Correct.
FI selling is ending. A lot of cycles are ending.
Yeah.
I hope the bull market cycle is not ending.
No, I think we are still in bull run. As I said long back, like easy phase of bull run is over. We are in bull run, decisive phase of bull run. Okay, that's
decisive phase of bull run. What is
difficult?
decisive?
We are in decisive bull run,
okay.
But within that we are in difficult phase of bull run. Okay, now let's look at India first of all. So India is right now in a mild risk to I'll not say extreme risk on, but it's a risk on phase for us. And where US is risk off phase. Right from January, US came in the risk off phase. So we are in a very unique situation where if this is the background, then money will flow to India. And you have seen in last 15 trading session or 20 trading session, FI flow has been constructive. The moment US investor becomes slightly jittery about US, money will move out. And this was our thesis in 2025 that decoupling process will start. We thought maybe by July, but because I was linking with the dollar cycle peaking out and hence decoupling will start, but had already started. That process has already begun. What it means that people are looking for safety, okay? And even look at European investors, they are also pulling out from US. US, we have seen extraordinary cross-border flows in last many years. I think that cycle has peaked out. And if we believe if 10% money shift from US to emerging market, Asia-centric emerging market, there will be tsunami out here, okay? And that's the reason the last, our fact sheet we wrote is bad for India and China, okay? It's not that bad for emerging market, it's good for India, okay? In fact, look at the beginning of the year, people were bullish on, best of the strategy was bullish on US. They have written off emerging market completely. Now, exactly reverse has started. US actually peaked out. Still, I think we have said in January that US will correct 15 to 20%, particularly NASDAQ is already corrected. I think maybe you can see small pullback rally, but I think ugly phase of next level of fall is still pending in US. Okay.
But Sandeep, why do you call India risk on? Is it purely because of the valuations, or are there other macro parameters which make you feel
it's a macro parameter. Okay. So like last year in July 2024, we were very early to say it's a risk off phase for India because macro based on a lot of high frequency data which we track started deteriorating. So we were very early to say that India risk off phase begins. Though market rally till September, so it's irrespective of the market, okay. But from a macro perspective, it's deteriorating. So now we are seeing that early signs of reversal. We are not saying that we are in massive risk on what happened in September 2023 last, and then we saw a big pullback rally played out. So that's not the case. Right now, see, markets are not about absolute always. It's always about relative, okay. Money always shift on a relative basis. If you find it difficult to make money in US, people will move out, and this is the phenomena. So it's not like the same FIs who were seller for last 2 years or many quarters, same institutions are buying again. So something has changed. Is India become very cheap? Answer is no. India is not that cheap. Marginally correction, okay. But what has changed? The perception about US has changed, okay, and hence they have to shift. Where they will shift? Where they see safety is better. It's not about absolute return, it's about safety first. So in this environment, safety is very much in India, okay, both from a currency perspective, macro perspective, and now given the size of the Indian institutions or the corporates which we have and the entrepreneurship drive we have. So we are in a very commanding situation. I think India was leading in every aspect. We peaked out first, we bottomed out first. And hence this rally, we will be the leader, and which is the case right now.
Okay. Then why have US markets retraced the post-tariff, sell-off? Today, major US markets, S&P, NASDAQ, Dow, all of them have pretty much retraced whatever they lost in the month of April. If the problem is in US, then why have US markets come back so smartly?
See, Nikunj, what you have to look at, if I maybe best gauge will be the VIX indicator, will give you the wall index, it spiked vertically. And whenever VIX spikes sharply, it tends to cool off before you see next level of up move again in the VIX. And that is the reason any extraordinary shorting or anything which is linked with the news flow, because why on 7th April? Because the Trump tariff drama started, okay, or most noise or narrative, whatever name you want to call it, small deviation from that, people take it positive, okay. But if you ask me, everything is sorted out and everything is settled and world is back to normal, answer is no. So you have seen extreme reaction on one side, then we are seeing a reverse of that. May again market will correct again.
I am looking at your holdings right now, and one of your top holdings in your small cap scheme is Reliance.
Yeah.
In your large cap, it is Reliance. In mid cap, it is Reliance. Right. Then I look at the number 2 holding in all your schemes. It is Jio. Small cap, it is Jio. Mid cap, it is Jio. Large cap, it is Jio. ये क्या हो रहा है?
So I'll answer is very simple. See, when you get into a risk off phase, when I say we were early and we underperformed also, it's not like we underperformed. It's a part of a larger strategy. What you do? We move from illiquid to liquid. You move from small and mid to large, and you move from high beta to low beta. Okay. Now, in a mid cap or a small cap, you have a compulsion of maintaining certain weights. Let's say small cap, we have to maintain 65% small cap. Okay. Now, I'm not negative on small cap from a longer term perspective, but from a near term perspective, we felt, okay, or near or medium term perspective, that they have potential to underperform, and hence it makes sense to move large cap. And liquid names like some of the names
so small
you highlighted.
caps are still expensive. The risk of liquidity is still there. So you would like to have within small cap exposure to large cap.
So I think it's a balancing act. Okay, where I'm trying to balance my beta of the portfolio, I'm trying to balance liquidity, I'm also balancing my any redemption comes. So far nothing has come, but I'm saying every aspect, it has to be well. See, I always believe in our portfolio, I think liquidity is very important, that we always say liquidity is the prana. Okay, so that if you don't have that liquidity in place, you know, so it becomes very difficult sometimes. It's a psychological discomfort, whatever reason, if you are unable to sell anything. So we as a house give a lot of importance on liquidity analytics, and when it comes to our own portfolio, we do look into that aspect also.
Sandeep, what's the one space that you're completely avoiding? And I'm just taking a cue from those Asian Paints numbers. I mean, forget about the stock price performance has been, it's pretty much hovering around its 52-week lows. But those numbers are really screaming still in a void. Is this the market to go in for bottom-up neglected stories? Maybe like paints as a segment? Because now you've got that crude reversal?
So I'm without getting into stock specific, any stock which gets into hated or neglected, then we as a house always look for buying opportunity, and maybe I'm not ruling out for the Asian Paints also. Okay, but the entire thesis right now is about, you asked me a question which is the sector which we are slightly more negative. In fact, since we turned negative on US market, particularly Nasdaq, so we are grossly underweight technology. Okay, technology, maybe we have hardly any exposure in technology. Okay, so it was an outright call on the US market. Like how September we turned bullish on China, what you'll do, you go and overweight metals. Okay, because there is no way directly I can play these markets. So indirectly we try to protect our impact for whatever reason it happens. So currently our entire focus is on domestic story. Right from January it is skewed toward domestic, and within export only generic stocks we have, because we believe irrespective of noise and irrespective of price movement of today also, we think there is no choice for you. Even for US customer also, we are like 55-60% of the generic market share we have. Is there any substitute like Bangladesh or Vietnam or any country? Answer is big no. So not much can happen there, despite the discomfort is huge right now. But I think the one area where we have comfortable earnings are there. Okay, so if you're looking at the earnings cycle also, we are very optimistic about the pharma as a space, generic as a space, and Indian companies are in the leadership position. So anything which is a leadership position which is growing, why we should be avoiding it? We are overweight in that.
You don't think there is a risk from tariffs, because there's been so much back and forth still
because
on
there is
pharma.
no substitute. Okay, if you have a substitute, okay, and let's say vehicle, you can defer your car purchase for 2 years. You can defer buying your garments, okay, for 6 months, but you can't defer your medicine even for 2 days. Okay, so that's a compulsion you have. So when you have a compulsion, you don't have too many choices. So if it's all about getting into that part rather than saying what Trump has a choice, hardly anything. And then our generics are 98 or maybe 78 to 98% cheaper as compared to other things. That's the way they're called generic. So if your value, if they are so attractive, low in the prices, how does matter? Even let's say they put 10 to 20% tariff, I think our companies are in the position to pass on immediately. And that impact even for US customer will be very tiny, and even distributors can absorb it. So so it's a larger thesis call without getting into Trump's narrative. Trump, whatever he's doing, is actually a very smart businessman. He is doing it everything right from a longer term, from his country perspective. And the way people react, he is stupid. No, he is very well calculated. Okay, everything. Sometimes he act like a stupid, but he is look at smartly. He has implemented 10% tariff, and nobody has made noise. Everything is 10%. Car, auto is 25, metal is 25%. So 10% anyway, global market has accepted it. We are actually funding them.
Right. You spoke about metals. There was a time when you were bullish on metals. Correct me if I'm wrong.
Yes.
Also, especially when you talk about metals, you were bullish on precious metals as well. What's your take now on the metals? How are you seeing it in the global scenario?
Precious metal, we are actually quite bearish right now. When I say bearish, only from a near-term perspective. We think that 3450, 3500 area, gold has peaked out, both from near-term and medium-term perspective. But we are structurally bullish from a longer term perspective. Somebody says that 5-year, 10-year perspective, I think one should have a very sizable bullion exposure in their portfolio. So we are very constructive. The challenge is that on immediately what you do, so we can't hedge much because none of the custodians are ready for hedging. What we have done, we have moved out from gold and shifted to silver. So we have to maintain 10% exposure in multi-asset. So we are running with minimum 10% right now. And instead of gold, we are running with silver. We think silver has better potential. That's the way, in a very dynamic manner, we are managing it.
Okay, you got approval for a new scheme in which you can go short on.
Yeah, it's not a scheme, it's a separate license known as the SIF. Specialized investment funds.
What is that?
So SEBI has recently come out of the circular on SIF. Basically, as a mutual fund, we get a new category where I can have a long short strategies. Okay, like in mutual fund, we can only hedge and we can only do true hedging. Same stock I have to short, or maybe hedging through options route or through futures route, but only in the indices. Okay, but in this case, like SEBI has allowed us to have a short position of 25%. So, starting point is 25%.
You can go short.
Yes. So, we
Where
can run long
short?
short strategy. Let's say we are running long short strategy on equity product. So, for whatever reason, let's say we don't like, let's say Infosys, we are long and short TCS, we can do that, which is not the case in current mutual fund. Okay. So, from a risk perspective, it's a great product. Okay. Though generally perceived as a high risk thing, but I think it's a specialized product, more meant from institutional type of investor who have institutional mindset, who are more financially literate about this product, actually reduces the risk, because in the bull market this strategy will underperform, but in normal environment is a great
so
risk
let's
mitigation
say if you raise money tomorrow,
yeah,
how will you construct that fund? Where will you go long, where would you go short?
Let the final approval comes for the scheme specific thing we can talk about. But
SEBI
let's say,
compliances, you
We're
can't
just
talk.
helping you with your homework before the approval comes.
so what we look at, let's say today, if I let's say today's context, okay, and I will like to, let's say, maintain my long exposure toward domestic side, okay, and some of the sector like auto where we have concern, so you can run some short position in auto as a sector, you can run some short position in IT, though it's too late right now, it's already corrected a lot, but it's example sake, if let's say in January we have that aggressive view towards IT, maybe you could have run 25% short position. IT is a great, not only hedging strategy, actually reduces my risk volatility in my portfolio. So it's a great product from a longer term perspective.
So where is it right now at these levels, given that IT, a large part of the correction hopefully is already behind us? Where do you have that kind of conviction to go acute short?
So since we are already in a mild risk on or risk on phase in India, I'm not looking for shorting anything right now, okay? Because even IT, I'm not going to advise anybody to go short, okay? Yeah. Rather, we will look for a buying opportunity at appropriate time. Whether appropriate time has come, answer is no, but it will emerge soon. So we are waiting for that opportunity, that inflection points. As and when it happens, we should be buyer in these names.
So like Reliance, where else do you have that kind of conviction that you can buy all out right now?
So I think if I have to ask me, infra is a space, large infra space, irrespective of any government in India, irrespective of any global environment, we are investing as a country in the infrastructure space, and that is the need of the hour. So I think, and you don't have too many companies like L&T if you ask me, there is a scarcity, okay. In last many years, only limited options are left. So anything related to port, airport, infra names, EPC companies, those are the areas where we are quite bullish, and we have a very skewed structure, including power. So if somebody says where is the long-term perspective, next 7-8 years, a decadal opportunity, I think power is still, whether you're talking about thermal, whether you're talking about green part of it, or any other alternatives.
So you're still bullish on the Adani group?
I'm quite bullish on the Adani group because they are in that India-centric space, okay, and irrespective of perception, since we do a lot of perception analytics, we were early in spotting that group. We believe, okay, from a cash flow perspective, they are generating, capex is in the right direction. So they will be a sizable and formidable player in this country if somebody has next 5-year vision.
You know, when the budget was announced, everyone thought, okay, tax cut, huge tax cut, 1 lakh to about 90,000 crore, and that in a sense will translate into better numbers for FMCG, low ticket items, food delivery, hotel, travel, tourism. But that trade lasted for about a month. I mean, on the budget day it started and it just fizzled out in next 2-3 weeks. what's happening to that good old consumer comeback trade after the tax cut and after the low inflation?
See, first of all, Nikhil, we have to look at this announcement. The saving just started in the April. When it started in the 1st February, when the budget came, it was just an announcement. Nobody has benefit in that sense. Now, the real benefit will come over a period of 1 year. Okay, so we are only in the 3rd month of that. Okay, so it's not like only April. Okay, effectively 2nd month now. Okay, so it's just a beginning of the next financial year. And so it will be too premature to believe that numbers are there, but obviously it's a psychological thing. And FMCG, if you look at, yes, consumption theme, even we are as a house very bullish, but they're not cheap. Okay, it's not like they have become attractive from 60 multiple, now they're only trading at 20 multiples, so it's not the case. Okay, maybe from 60 has become 40 or 45, but still relatively expensive only. So I think that's the reason a lot of discomfort was there, and people last many years have not made money. So it's again a psychological thing. So I have seen nowadays, any good news come, people look for a booking opportunity. Okay, okay, extraordinary good numbers, book it. Extraordinary bad, you are butchered that anyway. But even good numbers, people tend to book profit. That has been a trend because the mindset is negative. Okay, we see the background is not conducive. That's the reason we are more bullish. The behavior background is perfect. Investors.
Basically.
It's not about contra call, it's a data driven call. Okay. Now you look at where is the investor conviction? Absolutely missing. Few months back, India was buy on dips, now it's sell on rise. Okay. Second thing, leverage position, very low. Okay. MDF book, hardly, not much. I'm not saying not. Retail positioning, even the mutual fund side, month on month, we are seeing some amount of disinterest coming. But the good news is FIs are back. Mutual funds are buyer, retail have a lot of cash, and FIs are buying also. So one large participant who was missing for last many quarters is also back in the game. So where is the supply? There is hardly any supply. Okay, because today of this geopolitical tension or Indo-Pak tension, I think people have given up a bit. But I think in a very comfortable situation. So I think data points are more constructive right now. Okay, when everybody gives, as long the fear is there, you will make money. The moment greed comes into picture, we become cautious. So right now is the environment is fearful, and that's the way we see opportunity.
Sandeep, I want to talk about the PSU space in particular with you. It started off with the fancy and the frenzy towards just defense and railways names, and then we saw that the first signs of the sell-off in the market, which came in October, actually started with these two sectors. Where within PSUs, the entire cluster, not just defense and railways, do you find pockets of opportunity right now?
Yes. So first of all, let's understand from a larger thesis of PSU. Okay, so we were very early in spotting that thing, and we also cut down our exposure in June, July. And last few months, we have rebuilt our exposure. Okay, so we are added another 6-8% exposure across the board. So we are back to closer to 20% mark now.
So when you say across the board,
across all the schemes. Okay. So now in terms of PSU, so we have not added defense, we have not added railway. What we have added is large infra name, power names, oil marketing companies, okay, oil companies, okay. These are the names which are unique. We have seen some amount of hype or euphoria in, yes, in defense and railway because there were no substitute. So people have, so these are the stocks we have avoided because they are, I'm not saying overowned, they are relatively overowned as compared to other PSU stock, and they are not cheap. Okay, defense stocks are definitely not cheap. Okay, because of geopolitical tension, everybody believes that this is a great opportunity, and we think opportunity is there in PSU, but not necessary in these. That does not mean we are negative on defense. Okay, so as compared to, let's say, oil marketing companies looks more attractive. Okay, risk reward is more favorable in oil marketing company versus defense. Just for explanation's sake.
Right. I wanted to understand your take on banks, given the fact that there was a time when you all were underweight on banks. I believe you all have added some exposure to the banking
We are still
space.
Grossly underowned.
You all are grossly underowned. Are you planning to change that strategy at this point in time?
As of now, but
You
we have
underweight banks?
Yeah, we are.
You're the only one.
Yes.
Do you know that?
Yeah, exactly.
Do you know that?
Because over the last 1-2 months, all you've been hearing is only banks, banks and banks. That's it, isn't it?
So we have not again a contra call because we think globally banks valuations are going to deteriorate for various reasons. Okay, we believe leverage economy as a concept will deteriorate. Okay, the way commercial bank exists today will not exist in future. The way changes are happening, so it's a P deterioration story for us. Okay, what we have substituted with Digital, so Geo is part of that thesis. We have substituted with NBFC, so we bought many NBFC names, including the Bajaj Twins is a publicly disclosed in our portfolio. We bought many insurance company, okay, and some sort of wealth management companies also, some AMCs also. So our portfolio, instead of having banks in our portfolio, is more towards, it's not like we are negative on BFSI, we are constructive on financial services space, but less bank. Excluding bank, we are constructive on other space.
Before we wrap, what is cheap and underowned? What is expensive and overowned?
So I think though on historical data, banks looks attractive, but they are grossly overowned by domestic as well as FIs as well as family office. Okay, and it's a P deterioration story, so we don't like it. But grossly overownership, they are no more cheap, and they are. I think growth in these names will be also limited. On any parameter you look at, it will be very difficult going forward. So that's the area which is avoid for us. Okay, I'm not saying you go short on that or maybe cut down completely. It's like we can take active management calls, so we can have a ZILS exposure, zero exposure also. Okay, but many people don't do it. So we think it should underweight in banks, but not NBFC, where interest rates coming down. Under ownership was in NBFCs. Okay. It was a hated zone because of many last few quarters. Concern came on NBFC. People sold off. So that's the area. Insurance is another area which is underowned. Okay, valuation wise grossly pretty attractive, I will say, and large names. Okay, so that's the area we like to participate. I said infra is the name which you like to say, power is the name which you like to participate. Power is more safe than banks. Yeah. Okay, because clear visibility is there. Okay, and this is the area where government focus is there. Capex will take time to come on the capacity, whatever we are doing, but it's a very constructive space. What I will avoid is anything which in the past 2 years has been traded in the extremely over-admired territory, extraordinary hype. There are many such companies where huge hype got created.
By that logic, I should avoid the mutual fund schemes also. No? Last 2 year returns have been fantastic. Been admired by everybody.
But it's not. But it's got created. But it's not one stock, na? It's a basket of stocks. So when you're looking at basket of stock, that thesis will not work.
And avoid gold, look at silver. Opposites happening.
Relative basis. But again, these are a lot of people get confused with our call because it's a very near-term call. If I ask me 1 quarter call, one tactical call is that we are underweight gold, and we have been vocal about it. Yeah. But somebody asked me 5 years view, one should have a very sizable exposure in the bullion market.
Okay. Well,
Sandeep, I have one more question for you. But before that, I just want to quickly mark the India VIX and the markets. It's been a sudden fall that you're seeing. On the futures, we're down about almost 200 points. And you know, this move has really come in the last 15 odd minutes or so. We're not blaming it on Sandeep Tandon at all. Look at the spike on India VIX. It's up almost about 9.25%. And just a few minutes back, it was up over 11%. What's actually caving in? Pretty much all the sectors are in the red, and look at the breadth of the market. And I'm just looking at the F&O pool. It's 201 stocks which are standing to the red, with just 20 names standing to the advances right now. This is within the F&O pool. Zomato is your top loser on the index, 3.5% lower. Adani Enterprises, M&M, Tata Consumer, Hindalco, Eicher, ONGC, sudden U-turn. Given that it started off okay, and for the better part today, we've just been very, very quiet. So Sandeep, just lastly, the 3 things that you mark or rather monitor when you wake up every morning, given the kind of turmoil that the globe is in right now. The VIX and what else?
Global yields, not only US yield, all global yields for the developed market, including emerging market, even Chinese yields are important, 10 years, 30 years. Yields, currency and VIX. These are the 2 important things. We have already written the beginning of 2025. This year, you don't have to watch equity market, watch yields and currency market. You will get all answers.
I will give you one place, you'll get it anyways. Watch ET Now in the morning when you get it. We'll give you yield, we'll give you currency, we'll tell you US market. So you don't have to look at phone or internet, just watch us, be with us, and you will get
we always do that.
Well, by the way, I guess what explains right now that there could be that dip in the market, the Ministry of Defence has just issued a statement about the ongoing tensions at the Indo-Pak border, where Indian armed forces gave a befitting reply to Pakistan's unprovoked attempts of escalation. 16 civilians have also lost their lives. I'm going to quickly take it across to my colleague Sameer Dikshit and get in more details on what exactly has the Defence Ministry said. Sameer?
So on 7th of May in the press briefing, the Ministry of Defence, they clearly mentioned that Operation Sindoor was specifically about neutralizing the terror camps being operated either from POK or Pakistan. And specifically it was mentioned that no military establishment or any other sort of establishment was targeted. But it was reported that on 7th and 8th of May, the night of 7th and 8th of May, Pakistan tried to attack on the military establishment here on Indian soil on the northern and western side of India, whether it be at Pathankot, Amritsar, even Jammu, Srinagar and similar sort of other locations where there are military establishments. These were targeted by Pakistan using the drones and other sort of things, and that was neutralized by Indian by using their own defense mechanism. But it was provoking in nature. Not just this, it was also reported that Pakistan, they engaged, they got in mortars and they used the mortars, they used heavy caliber artillery and they were firing intensively at the LOC, at the line of control. And then India was compelled to retaliate, to give a befitting reply, and India used a similar sort of response to bring those sort of mortars or the high caliber artillery which was targeted to India to bring to a halt. Now India has categorically mentioned that no escalation will be done from the Indian side, but yes, if it is being provoked, if the kind of artillery is being shelled from Pakistan soil, then India will give a befitting reply. And that is the reason that now what you see at LOC, the kind of engagement which is taking place, it is all because of that the Pakistan is now using their strength, their military strength to provoke, to engage into sort of a fight with India, and now India is giving that sort of a reply. But yes, when Pakistan used these mortars and high caliber artillery, that led to loss of innocent lives here on Indian soil. 16 innocent lives were lost in this cross shelling firing, which included even children and women as well. And now India is responding to all these things, and India has specifically mentioned that it will respect the non-escalation if it is respected from the other side as well. But if Pakistan uses any sort of drone or mortars or the firing from the other side, intensively firing they are doing, then India will give a similar sort of response.
I can go.
Right. All right, Samir, thank you so much for that, for getting us those updates. If you look at the currency market, that one also has reacted pretty sharply to this particular development. You have the rupee that has weakened quite a bit, about 1% against the dollar at this point in time, and that's the Defence Ministry statement that is flashing on the bottom of your screen. But on that note, we slip into a break on this edition of...
Okay, we've got the Defence Ministry just issuing their statements. Let me get on board. Lieutenant General V.K. Chaturvedi joining in on the show right now, a veteran, to talk about these latest developments. General Chaudhary, thank you so much for your time. Just wanted to assess what's really happening right now, because it seems like there has been retaliation from Pakistan's end. There has been loss of civilian lives as well. What next are we looking at?
Madam, we are facing a very rogue army and a failed state. To predict what they'll do is very difficult. But this much I can say, that the response and the retaliation from our Indian forces will be extremely hard and will be at the place from where they have tried to cause damage to us. We are not going to hit any civilian targets. We are not going to be unethical in our dealing. We are a professional army, but we will not tolerate nonsense from Pakistan anymore.
Think India's response will continue to be refrained, or do you think India will be much harsher now in its retaliation?
As our Foreign Secretary yesterday has already conveyed our intentions, he said that our response on day 4 yesterday night was measured. It is non-escalatory, proportionate, and very, very responsible. India is a responsible nation. India cares for humanity. India cares for relationship. India does not indulge in anything incorrect. The way they have attacked our people, our brothers in Pahalgaon, and they shot them after asking their religion. So it is only a punishment to those who tried to cause the divide within the country. We have told them that our term is Bharatiya, and we will not let anybody who tries to damage our property, damage our installations, or hurt our people get away. This is the lesson we are given. So Pakistan needs to learn the lessons, behave like a good neighbor, and control the terrorists which are roaming around freely. Can you believe one of the terrorists last night, the chief of army staff is laying the wreath? It's a total, I think, what type of a nation this is which honors the terrorists?
What I would also like to understand at this point is, what role do you think international agencies like a UN, the US government as well? We've heard Donald Trump, the president of America, also being very vocal about the situations currently in India, Pakistan. What do you think the role these agencies will try and play to try and mitigate what's happening between India and Pakistan, and trying to put both countries on hold and try and prevent further escalation of the situation?
You are very correct. In fact, our response yesterday was that it is measured non-escalatory. We did not want escalation. We wanted to give the lesson to those terrorists who caused those heinous and crime on our people. Now, most of the countries in the world have said restraint. They have asked for restraint from both the countries. Some countries, of course, have said that India has the right to punish those people, and they have a right to save their own people from such atrocities. I think UN, of course, today does not enjoy the effect that it was meant to enjoy. But other countries like America, England, and some of the Middle East countries also, Russia also, China also, they can play a very responsible role. Tell Pakistan to behave. Tell Pakistan to not escalate. They are the ones who are doing it. They try to launch some operations in the north, west, and the south. And India has to respond. We cannot be a silent spectators to something happening.
Mr. Chaturvedi, thank you so much for your time. And of course, this is a developing situation. We'll keep coming back to you for some reactions. But I think what's important is right now, we had the US Consulate in Pakistan give out a statement, Cheryl. What was that?
Yes, absolutely. You had the US Consulate, or rather US State Department, beg your pardon, which said the US Consulate General in Lahore has directed all the consulate personnel to stay, to shelter in place. They are saying that the consulate has also received initial reports that authorities may be evacuating some areas adjacent to Lahore's main airport. So that's also one of the statements that is coming in, and it's coming over the last few minutes or so. And that's one of the reasons also where you've seen the Defense Ministry statement also coming in, Aisha, and you've seen the market reaction. But Kunal, what's your take coming in on the markets, given the fact that yes, it's a very volatile situation? How should one gauge all of these news flows and actually position themselves in such a market scenario?
I think the best way to try and do is to have a lighter position in terms of trading, because I think what's happened today, in the last 1 hour or so, 1.5 hour or so, is the India VIX has managed to shoot up. So I think from 19 levels, 19.2, we managed to see a rise to almost 21, 21.4, 21.5 on the India VIX. That's a very steep, sharp and a sudden jump on the VIX, and that has spooked the markets a bit. And that's what I think you're seeing a larger reaction, where the stock-specific front, you're seeing volume-based selling. Indices also have managed to come back into mild retracements. So I believe that that's an indication that the markets could remain a bit more edgy. The best way to try and trade is to wait out for this volatility to settle down, because till the time that doesn't happen, these mild pickups in price action, I think, would be faced with a lot of selling, and you might see the markets a lot more volatile than what we've seen earlier.
Right, you can see quite a bit of cool off, and more so, the pain is being felt in the broader end of the market. And look at the way some of these large caps are also falling. M&M down 3%, iShares down 2.5%. Zomato is back to those 229 odd levels. Bajaj Finance, SBI, Tata Steel, Bajaj Auto, Bharti, all these stocks are actually giving up gains. In fact, it's only Axis Bank and HCL Technologies to some degree which is actually still managing to hold ground. The other stock which is cooling off quite a fair bit is Asian Paints after that one-off that came by in the PAT. Irrespective of that, at least on the bottom line, the numbers have managed to miss the estimates by a huge margin, although the top line looks largely in line. But Rabinder is here to tell us more about how Asian Paints' quarterly performance was. Rabinder?
Well, as Asian Paint has announced its Q4 number, and company reported a revenue at rupees 8,330 crore, which was down by 4.5% on a yearly basis. And if we talk about net profit, then net profit also saw a sharp decline with exceptional loss of 183 crore in Q4. Company reported EBITDA at rupees 140 crore, which was down by 16% on a yearly basis. So PAT and EBITDA was below the street estimate, and revenue was largely in line with the street estimate. So overall, Asian Paint Q4 number was not that good. And if we talk about decorative paint business in India, their registered a volume growth of 1.8%. And if we talk about segmental performance and the international business, in international business, sales decrease in Q4 by 1.5% on back of currency devaluation in Ethiopia, Egypt, and macroeconomic challenges in Bangladesh. And if we talk about home decor businesses, then the home decor businesses saw muted performance in Q4 FY25 with pressure on the household disposable income. And company's industrial business saw growth of 6.1% in Q4 FY25. So, and lastly, and commenting on the result, Amit Singhal, CEO and MD of Asian Paints, said that the overall macro environment remain uncertain, and they are cautiously optimistic about a recovery in the demand condition. And lastly, demand for decorative coating was only marginally better than the third quarter. So overall, a weak set of number of Asian Paint in Q4.
Absolutely. Thank you so much for that, Ravinder, for getting us the highlight of the numbers for Asian Paints. Definitely a subdued quarter coming in, much lower than what was anticipated by the street. The stock is taking a knock about 1.5% at this point in time. We have Sandeep Sabharwal joining on the show. A very good afternoon to you, Sandeep. And let me just talk about Asian Paints with you. Yes, the numbers are much below than what we were anticipating. And the fact that their businesses have not performed well, which means the competition right now is eating into the business.
So I think this has been expected for the last 3-4 years that competition will come in and margins will get squeezed for the paint industry, and that's played out. And I think Opus has taken away some market share. They have induced price competition, and as a result, we've seen that the value growth is less than volume growth. Now, to look at things going forward, my guess is that we are now coming to a stage where the worst of the impact on profitability of competitive intensity seems to be getting into the price. And depending on how the company performs from here on. So I would think downside from here is limited. Pace of recovery will depend on the pace at which profitability sustains and stabilizes and volumes improve. But I think on risk reward, now after a period of 3-4 years, we are now coming to a stage where as a contrarian investor, one could start evaluating investing in this stock.
So as a contrarian investor, you can look at look at buying Asian Paints at this point in time, right? Just correct me if I'm wrong. Is that what you said?
Yeah, now and spread it over a few weeks. So because the market scenario is also such that it's better to spread and buy, because it's not that this stock is going to run away very fast very soon.
Sandeep, I also want to talk about the overall market, because right now, after some statements coming in from the Defence Ministry, you've seen a sudden spike in the VIX. The market has taken a sudden fall. Sure, we've been consolidating also for the last 3-4 odd days. But do you think the market could get susceptible and sensitive to Operation Sindoor?
Yeah, so it depends on the speed and pace of escalation and how it gets resolved. Now, the fact of the matter is that I think from the perspective of the enemy country, they will not be able to sustain for more than 3-4 days. So it's a question of how big the escalation happens and how India retaliates. I think all this is in the air now, very tough for us to evaluate what exactly is going to happen. But I think things will be much clearer a week from now. That's my guess.
Right, okay, that's the take coming in right now on the overall market. But Sandeep, if we were to fall further from here, other than Asian Paints, which we discussed, where else would you look to perhaps add fresh positions, or even where you think that, you know, there are opportunities and there is an oversold move in some of these select few sectors or stocks, if you will? Are you seeing any such opportunities?
I think on the large cap side, companies which have been delivering which are outperforming companies like M&M, Reliance, ICICI Bank, L&T, all these kind of companies, or Bharti Airtels, all these on the large cap side, all of them should be on the lookout to buy on declines. And initially get into large caps, and then as the situation stabilizes, look at mid caps.
On Reliance, it's seeing a little bit of a cool off. There's of course L&T as well, which also hasn't really moved much at all in this April recovery which the market saw. M&M, of course, Bharti, some of these stocks have really been those leadership names, no taking away from that. But Kunal, let's analyze some of these charts and let's pick up on Reliance, or for that matter even Asian Paints. Do you think these can be bought at these levels?
Well, Reliance, of course, can be bought at current levels. Of course, the only caveat is that we don't see any major news flow surrounding the markets, as well as a further spike in the India VIX. That is the only concern which the markets could probably get, because a further rise in the VIX could probably lead to an immediate pause in the trend for many of the stocks. Coming to Reliance, I think largely with the stock holding on to that 1400 levels, trading just about that 1400 mark on the back of higher volumes uptrend for Reliance earlier. The stock was almost at 1100. To move from 1100 to 1400 mark for the stock in just a matter of 1 month, and then staying about those levels, I think is a very strong indication that we've seen a potential change of trend for Reliance Industries. The 200 DMA still remains to be a key support for the stock. Asian Paints, on the other hand, the stock was seeing a bit of a recovery from 2100, 2150 odd mark, which was the support for Asian Paints. The stock moved towards 2400, 2450 levels, and then now it's gradually come back towards the 50-day moving average. The concern, of course, is that if the stock breaks below the 50-day moving average, which is at 2280 levels for the stock, you might see maybe a bit of a short-term correction further. But largely on the long-term charts, on the monthly charts, etc., we are looking at a strong base building formation, which has already happened for Asian Paints. So it's a matter of time that the stock would get back into a very steady kind of a recovery. So far, because of the volatility of the markets, even the stock is at the base of a correction.
I want to bring up L&T because it's due to report its numbers. We're anticipating the Q4 order wins between about 80,000 to 1 lakh odd crore rupees. But I think the visibility, the commentary from L&T is going to be extremely critical this time. Sandeep, since you do track L&T pretty closely, wanted to understand whether you think L&T could be susceptible to any global risks, because some part of their revenue does come from global operations.
So the global risks have not increased in any way over the last few weeks. If at all, there have been talks to de-escalate, and the tariff situation, the talks are going on, and things are not worse than what they were a few weeks back. So I think I don't see any impact of that per se on L&T.
About L&T, given the fact that the stock will, or the company will be coming out with their earnings later today, or rather just after market hours. But let's take a look at what the markets are doing over the last few minutes or so. You have the broader markets that have seen a sharper fall when you compare it to the benchmark indices. No doubt we are 8-10% down on the Nifty, but it is a mid-cap index that's down in excess of about 2.5% or so, 2.3% downtick for mid-cap index. Small-cap index also weighing heavy at this point in time, given the fact the statements that are coming in from Defense Ministry, from the US Consulate General in Pakistan, as well as some commentary coming in from the neighboring nation as well. So that's weighing heavy on the markets. Let's take a look at what Escorts Kubota is doing at this point in time, given the fact that they came out with their earnings a short while ago. And let's take a look at what the earnings are looking like for that one, as I believe that the numbers are actually a bit better than expected. That is the Escorts Kubota consolidated numbers. Yes, they're better than estimated, but the stock is also now declining given the fact that the rest of the market is declining. But on that note, thank you so much, Sandeep and Kunal, for being a part of the show and talking about the markets and the strategy going ahead. Let's take it across to Snehi to take us through the closing. Snehi?
Well, absolutely. Let's take a